Hello and welcome to Crypto Weeklies. My name is Josh, and today we are going to talk about Render, conduct its AI-based analysis and regression-based analysis and forecast. Before we do that, we'll briefly cover what Render is. It's a decentralized GPU rendering related play. Render uses a decentralized platform to connect users who needs GPU power, which is the GPUs power the AI networks and graphical design related networks. So this is the core of Render's USP. GPU rendering offered at a decentralized mode for rendering various jobs in a distributed network. It comes with a dynamic pricing model. The prices are based on complexity, urgency, and resources, and has a job distribution related algorithm which matches the relevant jobs related to rendering. So what are the unique features? Some of them are peer-to-peer rendering, so there is no centralized farms, dynamic pricing, competitive pricing. They offer advanced matchmaking and optimizing the performance of the decentralized GPU network, and it has trustless validation because it is operating on a blockchain. So application of Render are definitely visual effects with GPU rendering, virtual production design, and use of these GPU networks in AR and AI related rendering. So benefits again, scalable, cost effective, secure, verifiable, and incentivizes GPU providers with render token. So this is where the render token comes in. We on the website like to analyze the top cryptos, one of which is Render over here, number 31 by CoinMarketCap rankings. So none of the content that we share on this channel is financial advice. We do our own data science algorithms and machine learning based predictions for Render outside top 20 by market cap, but between top 20 and top 100. The AI based forecast, this is the render token. The tokenomics for render token over here, we can see that right now the price is at around $6.51. The circulating supply at around 388 million, total supply 532 million, but no max supply. This token has been active for about let's say over little over 4 years. It has had a considerable rally. It is also one of the 7 gems that we have analyzed using Sharpe ratio on this website. This takes into consideration of total return of a crypto and divides it by total volatility. So it's a measure of what are the risk adjusted return. So out of the 7 gems that we saw the price performance, the least volatile is definitely Bitcoin with 40% volatility, total return since January 2023 about 250%. Kaspa is the one of the higher volatile but has the highest Sharpe ratio thanks to its 30x returns over the last 1.5 year. Render definitely middle of the pack, total return at around 15x, volatility at around 100%. So Sharpe ratio slightly over 15. So coming to the AI based analysis or machine learning based forecast for Render, this is the weekly price action since Render launched about 4 years in 2020. The price action has been similar to this is logarithmic scale, similar to how Bitcoin had some of its early stage price action on during 2020 before 2020 and again with Render, the AI based forecast that we have today that is the week ending July 7th. The base case scenario forecasted by our model using ARIMA, LSTM, and XGBoost at between $7 and about $11 between now and December of 2024. The bull case, that is one standard deviation bull case, which considers about 70% of the price action, that theoretical ceiling, if the bull market were to come back, is between $7.80 and about $30 during between now and December 2024. On the other hand, if the prices were to go down like they have been going down since March of 2024, this is again one standard deviation floor. The purpose of these one standard deviation ceiling and these floors are not, or the base case scenario is not to say what will happen tomorrow to the price action, but if the price were to go up due to the market forces, what is a theoretical ceiling, and if they were to go down due to the market forces, what is a theoretical floor. Again, no one can claim that the price has to do something today or tomorrow. This is just an estimation, but it uses machine learning and data science techniques to look at the historical price and determine what could be those price levels. So to the downside, the floor is between $3.65 and $5.75. So that's a little bit about its price action. Now discerning its regression based analysis with where it stands. In terms of, let's get rid of the upper and this is the polynomial regression function that we have come up with to check the relationship between price and time. If there are certain times where the price goes up with time, so there are certain times where the price goes down with time. So that means that it doesn't have a linear relationship with time, but has a polynomial relationship. Ever since you can see since 2023, essentially the polynomial regression function has been in an upswing. That means the prices are going up with time. That's one of the reason why render is the gem that the 7 gems that we have analyzed back in January 2023. Price was at around 43 cents, now at around $7, almost $7. So that means it did have almost a 15x that we talked about in terms of its return since January 2023 began. In terms of where the price action right now stands is at around $6.58, whereas the one standard deviation lower band regression band is at around $10. The fair value per this analysis at around $19 if we were to include the second band, which is the 2 standard deviation regression band, and you can see that the price is almost 99% times above these 2 standard deviation band. That's the reason why these bands are created, to check the theoretical upside and downside. That at 2 standard deviation you get about 95% accuracy, and if you were to wrap the bands to the either side, you would see that about 5% of the time price action is outside this band, most of the time spent above the 2 standard deviation band, some a little time below the 2 standard deviation band. Right now the 2 standard deviation trailing support is at around $5.34. So this is a regression based analysis. Right now the price is between 1 standard deviation and 2 standard deviation. In terms of risk color, this is our price and the difference between price and apologies for that. This was the 20-week price difference between the price of render and 20-week moving average of render, color coded based on the risk level. So that is when the price is substantially below the simple moving average, the risks tend to be lower and lower. So if you want to toggle between the risk level, you can see that the risk levels right now are between 0 and 0.1. That is, if we were to get rid of these, you would see that ever since late June of 2024 and early July of 2024, the risks have fallen below the 0.1 range. That is because the price has been considerably below this 20-week moving average. This risks have been highest on March 17, 2024, when the price was at around $13. So this means this tool does a fair job to know whether the price is in a free fall like it was during April of 2022. But at that point, at risk level 0.1, DCAing at that point, that is dollar cost averaging, at that point would not have been that great, because this would be trying to catch a falling knife. Every single time this indicator would have flashed at around risk at 0.1, but the price would be almost 5x or 1/5 of what it was, from $1.50 to about 32 cents. So again, one single metric cannot do the entire job of predicting. We have tried a lot for that. So in conjunction with price difference between simple moving average, this is again not just the difference of price and simple moving average, but the polynomial regression function and the difference of the price and the polynomial regression function. When In terms of when this particular indicator also has a local low on the risk level, so you can see over here when the price was at around 94 cents, that at that point the risk levels would have flashed, um, definitely flashed the lowest risk level during May of 2022. Again, slightly better than DCAing at $1.50, DCAing below $1 over here would have definitely flashed this signal. And also similarly during August 2023, when the price again capitulated slightly below $1.50, that again would have marked a low on this one. In terms of where we stand right now, price when the price went below $10 on this one, this price again, the risk levels per this analysis has been again low at around 0.1 right now. So if we were to take into the consideration that render has a bottom regression pattern at $2 and basing on the expected value between right now the regression price is at around $13, whereas bottom is at around $2. Again, a 50% of those between $2 and $13 would be at around $7 or $8. So that is when again using basic mathematics on top of these regression analysis would help. In terms of where the future what the future holds per this regression analysis uptrend, if we were to try to look at render on its future during an upswing mania phase in the market, if there is a 2 standard deviation peak, the future regression analysis could be would be price action at around $100. So this is again one way to forecast, but again this is not using machine learning or AI based analysis. So if we were to summarize everything that we discussed, the price action for render in terms of its DCA potential is at a fairly low risk level. This is not financial advice. Simple moving average based the risk level analysis is also pointing at the lowest risk possible. In terms of the AI based forecast for render, the theoretical upside is between $7 and $30 till the end of year, and the base case between $7 and $12, and the bear case between $3.50 and $5.50. So this is all about render. Before we leave this video, we'll briefly cover the wider crypto market. The crypto TLDR, which is a machine learning based analysis of sentiment related, social sentiment related to crypto. The overall sentiment score at around 55. The most of the narratives are either neutral or bullish, but there is no high confidence bullish narrative over here, but there is a high confidence slightly high confidence bearish narrative at around BTC price prediction related to rally or crash. Most of the highest the pump in the weekend is one of the highest bullish narrative over here. Going forward to the narratives which are gaining some popularity over the last 7 days in the crypto market, these are the machine learning model tries to scrape content on YouTube related to crypto over the last 7 days. Popular narrative definitely Bitcoin, then the price action. The bullish sentiment is definitely back. The bearish sentiment over here has gone down. The size on the wall determines the popularity. Again, Solana is gaining some popularity. Ethereum is definitely one of the narratives popular, but not as popular as some of the altcoins over here, such as Solana, Polkadot, even you would say XRP and Cardano on the narrative wall. And in terms of analysis of simple moving averages, especially for the price difference between price and simple moving average, especially for Bitcoin and ETH, this is normalized between 0 and 1. The BTC risk level at around 0.2 is a significant time in the market. If the risk were to go even lower, that would constitute a phase of the market where the risks are similar to what they were during late January 2022 and also between June and August of 2022, where the risks were fairly low, as well as during after the summer during the summer of 2021, when the risks were low. So this is again an additional analysis that I wanted to share. In terms of the performance over the last 7 days, you would see that most of the cryptos have had a decline in performance over the last 24 hours as well as over the last 7 days. 30-day performance is standing out. Tron and Toncoin are standing out over the last 90 days. Kaspa stands out the most. The crypto of the day, definitely Tron, with a decent performance over the last 4 time period, the 24 hours, 7 days, 90 days and 30-day. Overall score at 4.5%. So this is another analysis, the year to date ROI for some of the cryptos, major cryptos, that is over here. Toncoin leads the pack. We'll definitely include render on this analysis to compare and evaluate. In terms of the peak value analysis, the last analysis, this is the overall risk in the market. The latest risk is at around 0.18. This means this is normalized between 0 and 1, takes into consideration several risk factors such as volatility, alpha, beta and Sharpe ratio, percent drawdown, and comes up with a single score of where we stand in the market. Are we in a low risk regimen or high risk regimen? At 0.18, the risk level you can see over here have been going down since middle of March of 2024. This is analysis of all top 100 cryptos by market cap, and based on the color codes you can see that at the lowest risk levels, that are the times during June, July of 2022 as well as towards the end of 2022 and early 2023 and late till October of 2023, most of the risk levels were at the lowest risk, between 0 and 0.1. In terms of the second best time to DCA, that is the low risk, the current risk levels are in this regimen between 0.1 and 0.2. You can see June, July of 2024. We have visited this risk level since January, middle of February of 2024, about a 3 or 4 months gap where we were in a moderate risk. Now back to the low risk. So this is again a single snapshot of analysis of whatever is going in the market, and with this I would like to conclude the video. Hope you like this content. If you did, please subscribe to the channel, also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day.